Hi everyone, and welcome to another quick take episode. Today we are looking at Telstra. So Telstra is a telecommunication company in Australia, provides phone, internet plans, and all of that all around Australia. So most of the lines that other telecommunication use is actually owned by Telstra. It is considered one of the blue chips company in Australia, and we'll explore today if it's worth investing. Okay, moving straight on to the financial. So looking at the ratios here, the PE ratio looks quite attractive, 20, and the industry is only 19. So let's explore if this is the case. Okay, so moving down to the quick ratio, it doesn't look like it has a lot of cash. It's kind of been last a year. So there's something there that we want to see why there's not a lot of cash and what's the prospect for this company. There is the dividend yield of 3.18%. And let's just jump over to the ASX website to have a look at the franking. It is 100% franking, so which is a good sign. And the dividend yield on the ASX website is actually higher, and I tend to trust this one more when it comes to dividend yield. So so let's move on to the cash flow. Let's see what's happening throughout the whole year. 2020, it's gone up by $400 million. Now it actually been going down. It's gone up, then back down, and then kind of back up again. Now, truth be told, I don't personally like Telstra. I think their service is actually quite bad compared to the other players. I actually am with Optus. My home internet is actually with Optus also. So and anyways, let's put that aside and move on. It is investing in spending cash in investments, so that's a good sign. We want to find out what kind of investments it's actually investing in. Financing, it is paying back debt. That's on gain. That's a good sign, but there's definitely a negative cash flow. And actually, with this kind of like low interest rate, I probably hold off on the debt payment just for now, and probably try to use the cheap money that's floating around for other investments purposes. Looking at the balance sheet, it looks like it has the current asset actually has gone down. There's not a lot of cash coming in, so it's not looking good so far. And so total inventory. So I want to find out what kind of inventory telecommunications like Telstra actually hold. So that's something that we need further exploration. Liabilities, there's a lot of it here, and that's just current liabilities, and that's probably why um, the so that's why probably the quick ratio is only 0.6. And there's a lot of long-term debt. It's been racking up debt quite significantly. So that's always what something that you need to consider. Is it a good time to? Where's a good source of money or borrowing at the moment? Is it through like bank debt, or is it through like issues of corporate bonds? At the moment, I reckon bank debt is probably a bit better, just because of, again, of the cheap money lying around. Okay, and income statement. I'm not expecting much from this particular one. Look, it's 2020. You can say it's 2020. Business is bad, possibly. But I'm just thinking that it's just on a decline overall. You can see from 2017, it's just been declining. I don't think this is something to do with the pandemic. I just think that maybe the pandemic contributed a little bit to it. But I just think that this is just they're on their way down. Like I said, I don't particularly like this company as a customer. And net income has been dropping also. And that's not a good sign in anyone's book when you start a business and all you can see is net income going down. Okay, jumping right over to the chart. I try to keep these videos nice and short and quick. And let's have a look at that. So you can see there, income has just been decreasing from there, and it's just gone down. It was at $6, and before that it was at $9, and it just has a tremendous a tremendous trend going down. So that's not looking good. There's a turnaround here, and we, because it's paying dividends, there's probably almost there's a buying pressure pushing it back up, but I just don't think that look, it doesn't even for this particular platform. Um, there's no data of earnings before this particular point, but from this point onward, we can see that it's not doing too well. So at the moment, I don't think it's a buy for me. I don't think it's a buy for me at any time at all, unless it really shows that it can turn the net income around, turn its revenue around, and really show that it can actually generate money. So I'm not sure if I even need to chuck on a Fibonacci retracement. I just very, very skeptical of this particular company. Um, but yeah, so it hits its bottom, it hits a resistance here, and I reckon it's because once it gets to this, the dividend yield is actually quite attractive, and that's what keeps it kind of like going up and down between this band. And I think that's what's going to happen is that as long as it keeps up its dividend, which is very hard to ask when its income is going down. So if it keeps up its dividend for however they're doing it, then it's probably staying within this band, just going up and down. So you can probably time it and buy it towards the bottom. But again, it's just timing. Bottom fishing is just not a good idea because if income really drops really bad, then it's going to have to drop dividends sometime. And if it drops dividends, it's going to sink even lower. I just don't think it's worth the gamble. I'm trying to invest in companies that are innovative, that's gonna and find a way to boost its income. So even if let's say the next income report earning it's higher than this particular year, I would wait for another report earning just to show that it has the ability to generate increasingly larger income each time. So at the moment, this is a no for me, and kind of like from what I know it is, I would say I would review in even 2 months. I don't. It's just not very attractive, and there's definitely other companies that I can look at with better dividend yield, better prospect, and I get appreciation in share value. But Telstra is not one of them. Anyways, that is pretty much it for today's quick take. If you like what you see, share, like, and subscribe. If you have any comment that you want to write, thing to comment on, do that down below. And if you have any suggestions on which company you would like me to do a quick take on, again, write that into the comment, and see you guys next time. Bye.